Now, if you're scalping, what I'm looking for here is we've seen it trade 41.5 and it rolls down to 38. So now what I've got is a little indication of range. We've then again rushed it down towards 38. It's held and it now starts to sort of tick up from there. Like I said, I don't really want to be long in this one. So if you get caught long, you can be quite quick to try and get out of that. Small flow scalps then. So this is not so much to do with data. This is to do with recognizing the nature of movement once a market has got itself a bit of a catalyst. So this could come after a piece of news. This could come after a break of a significant level. So, you get a market breaks a level, starts to accelerate. And because we've moved into a new phase, then the market starts to rebalance. And what happens in these phases is you will get different little pockets of action. So let me explain. What we've got here, the S&P on a drop, it started to bounce back. Now, what we're seeing in here is a little pocket of action. This is basically a bounce back towards the previous pullback highs at around about 41 to 42. And the market then starts to stick. Now, what I would describe this as is effectively a decision zone. Now, the way that I'm going to scalp a decision zone is if I have a view, a directional view, then I want to be playing one side of it. I don't want to be trying, as people always get told, oh, you buy here, you sell here, or sorry, you sell here, you buy here, up and down, up and down, up and down. You don't want to be doing that. The way that I would approach this is if my view is this is going to continue down, then I want to be selling the top, covering some near the bottom and trying to carry some for the move down. What's really key about a lot of these types of events or a lot of this type of scalping skill is being able to recognize decision zones and what I call sort of open spaces. With an open space, the last thing you want is to be getting yourself positioned long or short in here. You could be short if you've got a directional bias, but you definitely don't want to get caught long anywhere in this open zone. Once you then get too directional, then you've got a decision to be made. And that way, then again, you can either wait for it to break the range and play that, or you can play it from within that range. So let's go and have a little look at how exactly we go about this. What we're going to look at is the initial move down out of this zone and how to scalp that. This zone, incidentally, in the S&P is around about 41 to 37. This little zone down here is around about 28 to 25. And then we've got a few other little pockets of action in the middle, which we'll come and touch on, particularly around about the 34 area. So a few numbers for you guys to remember there: 41, 37, 34, 28, and 25. 5 numbers should be reasonably straightforward for you guys to remember. But what we're looking for here is little shifts in the nature of flow. There'll also be a couple of little tricks in there for you to watch out for as well. Right, let's get this one up then. Here we go. Right, so where we're starting off then is back at that previous reference point. So this is the upper red box. And what we're seeing is market coming back up towards this area. Now, the whole idea here is what we want to be trying to do is get short somewhere in this zone. You're helped out by a 200 lot on the offer. That's all well and good. Now, if you're scalping, what I'm looking for here is we've seen it trade 41.5 and it rolls down to 38. So now what I've got is a little indication of range. We've then again rushed it down towards 38. It's held and it now starts to sort of tick up from there. Like I said, I don't really want to be long in this one. So if you get caught long, you can be quite quick to try and get out of that. But that little range was established when you got this larger order that chased us down. So now that 37 is broken, you're looking now for 37 to act as a resistance. Therefore, you can now sell 36. You can put offers at 36.5, 37 area. And what you're looking for here is, where does this rotate down to? Where am I finding a low in here? And again, a little bit of pace there. So you got a bigger scalp on this one. We've just seen it rush down to about 30.5. So you can exit down at 31 or get your bid in at 31. We've bounced back and it seems to be sticking now at 34. So if it's sticking around 34, you can now be quite confident to be able to sell 33, 34 here and exit again around about 31. Another nice quick little scalp. And this is then moving down. Right, so this is then where we were, that little take from 34 down to 30. This is now moving down through this zone in here. So we've now moved, and I'm always looking at this in little ranges. So it was 41 to 37. Then it was 37 to 34. Very quickly, that became 34 to 30. So now we're looking, right, where's the next zone? Because at the moment, any pullback just gets capped and then it goes back down the range. So again, you could look at 33, 34 area for some more offers, see if you can get filled up there. But at the moment, it's seeming actually to be getting stuck around 31 and a half. So that's where we're now starting to get stuck. So if your bias is down, you can still continue to follow this towards the downside. Another little push there towards 29, 28. Back up, like I say, you could look to try and sell 30, 31 and a half now. Slams down, and now you've got this large order down low. I'll pause that for you very quick. That large order, and this is a classic little trick. Large order sitting at the low. We just whip down to it. This is your chance then to have a go, not only of getting out of your shorts, but also getting long. You could have a quick go at a bounce back from here, and your target is going to be where this has just come from. So I'd then be looking at that to go back towards 31 from here. So then we in at 28, offers up towards 30, 30 and a half again, try and sell that once more. And again, back down towards 28 is what you're looking for on this one. You get this very quick sort of reaction as the market tries to work out what to do. Is it going to go through that large order, that 1,000 at 27 and a half? Is it going to then, or is it going to reverse back through 30? So you're playing the short here again from 30 and 3/4, out again, taking another two and a bit handles, offers straight back in again. So this is the whole idea of the way that you go about scalping. You've seen that range. This is real time, normal time. This is not sped up or anything. And it's recognizing these little pockets of action. And if you can do that, you can then scalp up and down that. Breaks the level, you have to get out of that. You don't mess around. That's also key with scalping. Don't sit there and think, oh, maybe it'll do something else. Maybe it'll go here. Get out, reassess, work out what the market's going to do from here. We've fallen now into that lower scalping zone. So now that you're down in this zone, your job now is back to square one. We've had a little bit of scalping action on the way down that move. Now we're back to, right, what are we going to do from here? We've taken a few winners out of this move down here, probably about 7 or 8, sort of between 2 and 6 point winners in this little area here. So you've racked up quite a lot quite quickly, and scalping goes like that. When you scalp, what your P&L ends up looking like, if I just very quickly draw it for you, you will go through phases where you will do that equity wise on the day, and then you'll go for a streak of winners, and then you'll go like that, and then a streak of winners again. Because what's happening is these are often the phases where you get this kind of sideways action whilst you're trying to work out what's going on, as in this area as well. But when you get into these open zones, that's then where the sort of streak of winners comes from. That's where you get the bump in performance before you then go back to trying to work out what exactly is going on. Right, final one we're going to go and have a look at. This is a more technical scalp. This is a specific pattern. You're looking for very specific things on this trade. That's what you're looking for. In, out, again. And it's very, very distinct what you're looking for. That's the key to this trade. So let's get this final one going. This is the V reversal from the Deep Seek day. If everyone remembers back to that, I think it was the 27th of January. What we had was a very, very large sell-off, and then you get this very fast bounce back. Now, this is the end of the sell-off. That sell-off was 100, 150 points on the S&P. What we're looking at here is the V part, and this is on a 15-second chart. What you've got here then is an acceleration of the move down, much, much higher volume. This is key. You get high volume, and then you get this very distinct change down at the lows. There's no kind of messing around. It's not sort of trading down, trading sideways, trading up. This is down, bang, straight up. So the key to trading this is being able to recognize and knowing what you're looking for when it gets down here. What are you looking for that says, yep, buy it? And also, where are you going with it? That's your target, 74. So again, this is looking for another around about 20 points on the S&P. So scalping is not always tiny little 1-2 point winners. So let's go and have a quick look at this one. So here we go. This is the exhaustion phase. Now, that chart that I just showed you, the main bit of the move, if I just move this to the side slightly, this main move here is from 74 downwards. So we're going to be joining the action around this little zone here just before this big red candle. That's where we're going to be joining the action. And what we're going to see is the move down and then the bounce back. And with the bounce back, it's all about what exactly are you looking for to get yourself into that move. So let's go for it. Right. One of the key bits when you're trying to play any V reversal you think there could be is about recognizing the levels on the way down. We were just sitting at around 62. We've now started to push down a little bit further and we drop down towards 59, 55. The market starts to bounce. You see this really, really clearly on a footprint just here. So we start to rotate from around about 55 to 58, only for a short period of time. This is a matter of sort of 15, 20 seconds. And then we start to break. So 55 becomes a key reference point for you. Remember, this is still the move lower. But what's important about these kind of V reversals is this is just relentless. It's just down, 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 down. And now we've had a little bounce. This could be the beginning of that turn. And once you get that quick jump back above 55, that's your cue. You notice the delta has started to jump significantly. So this has gone from people selling to now just buyers rushing to try and get in. This is where you want to try and get long. You've got time, but you haven't got too much if you're hoping to get filled back down in the low 50s, around 48, anywhere like that. You're not going to. So the crucial part of this now is getting yourself in. Your upside target's big. You've got around about 20 handles or 20 points of upside target on this. So you don't need to worry too much that your stop's got to be at least below 55. 4-5 point stop for a 20 point winner is a very, very acceptable stop. So there we go. First little scalp back towards 62. Remember, 62 was the point where we stalled to start with. So we've got something out at 62. We're now looking for this to continue onwards and your target's then going to be up towards 74. Good example of a V reverse as well is you just get this one time framing on a footprint. This is an eight tick rotation footprint. So what I'd be looking for here, at a minimum, I do not want to get out until it breaks the one time framing. If you really wanted out, you could have got something out there at 66.5. But if we've already covered something and your goal is 74, then you can actually look at this and think, well, back towards 62, I can actually have a go at another little scalp there. Pick something up there and try and carry that one back up as well. So back up we go towards 71, 72. Again, think of it in ranges. We're rotating back up. The range is around about 72. That's where you're then looking towards targeting initially at this point and then potentially beyond towards 74. So again, it's stuck again around about 71, 72, nearly at 74. If it keeps sticking there, this is where, because it's slowed down, there's an element of discretion. You bring that in and you say, do you know what? 71 3/4 is good enough for me here. You take that last bit of the position. What I'd be thinking about here is there is potential now to run this as a position trade. Remember how far down we went on that deep seek news. We're above 74. You could look at this and say to yourself, do you know what? I'm going to hold this and see if I can carry it all the way back. It's highly likely that you have bought the low with a trade like this. And the key to it is the flow. It's understanding the nature of the flow when you got down to these lows. That sort of down, 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 and then it jumped off the low and it starts to rotate at a slightly higher price. Rotations are key for scalping. If you can quickly recognize those rotations, you can participate in the rotation. And by participating in the rotation, you get a great set